Catholicism and investing. There's a lot of questions out there. How should Catholics be investing? Should Catholics be investing? Well, in today's episode, Amanda and I sit down with Ben Martinek, certified financial planner, former big rig trucker, and owner of Bone Fide Finance. He's a financial planner for Catholics, and we answer lots of questions today. It's a great interview. You're going to love it. Keep watching this episode of the Wallet Win Podcast. Well, hello, Ben. Thank you for joining us today on the Wallet Win Podcast. It's a pleasure to have you. Thanks for coming on.
Yeah, pleasure's all mine. Thanks for having me, Jonathan and Amanda. We're really looking forward to today's topic.
Yeah, we are as well. And
just to let everybody in on one of the most frequently asked questions that we tend to get is surrounding this topic of investments. And it often goes something like this. You know, I've been budgeting for a while and paying off debt and building savings, and those felt tangible and doable. And all of a sudden, when people get to this milestone where it's time to begin doubling down on investments, they freeze, lock up, panic, forget everything they knew, and feel like this is some climbing Mount Everest and they can't do it. So let's break down some of that mental barrier today. And if you could, I'd love to hear a little bit about your own story of kind of how you got into becoming an advisor. And then let's talk about how investing can actually be a simple thing to get started with. So can you back us up and tell us a little bit about your story?
Well, we'd have to have a really long podcast if you wanted to know all of my story, because it's a pretty interesting one. But, some of the highlights is I, have a graduate degree in philosophy from Franciscan University of Steubenville. Met my lovely bride there. Came up with a great idea to become over-the-road truck drivers to pay down our own student loan debt. So certainly know the
Awesome.
daily hardships of managing debt, and the real visceral reality of it being in over your head financially can mean challenges of falling to sleep and having any security or peace of mind. It was very much on our hearts and minds through those first few years of marriage. But the short of it is we got introduced to Dave Ramsey and became pretty big fans of him. There's a lot to like about Dave and some things not to like. And ultimately got introduced into financial services. And so as our time on the road became towards an end, decided to give that career, that industry a shot, and pivoted into that initially in a more conventional setting, which a lot of financial advisors work, which is you really as a paid salesperson selling products, whether that's insurance or investment-based products. Wasn't particularly fond of that business model and thought it was just filled with a lot of conflicts of interest, and decided to go and launch my own financial advisory firm, ultimately Bone Fide Finance, which we've had up and running for about 6-7 years now, in which we work in a fee-for-service, fee-only capacity with our clients.
So for the listeners who are maybe unfamiliar, they haven't waded into this territory yet, could you just tease out a little bit more of the details between those two different types of advisors that they'll run into out there?
Yeah, well, I mean, the sad truth is it doesn't really take a whole lot to become a financial advisor. Anyone listening to this podcast or even yourselves, in probably just a weekend or a couple weeks worth of study, you could suddenly become a financial advisor and sitting across the other side of the table now.
No.
Supposedly, yeah. I mean, it's literally
a weekend?
Just about. Yeah, your Series 65 exam is really, it's not that tough. I mean, it's tough enough, but if someone's really academically inclined, you'll get through it just fine. So it's not a very high barrier to overcome. And supposedly, obviously, within just a few weeks, maybe a few months, is anybody really ready to give financial advice at that time? And truthfully, nobody is. But within the organization structure of most of these companies, you are educated, trained by these larger third-party institutions, and then they basically just tell you how to sell, and you go on sales calls and you try to convince someone that either this insurance or this investment product is the right thing for them. And a lot of people might even think that this person then is the advisor is compensated in some other capacity, when in reality pretty much all of their compensation is on whether or not you purchase that product from them. And so their capacity, I think, to meet you with where you're at and what your situation is and what your needs are, and then to offer advice that really is tailored to your best interest and not very self-seeking on their part, because they have a family to feed too. I
Right.
think you get very conflicted advice in that arrangement. And unfortunately, from someone, I don't mean to be too hard on them, but who aren't terribly educated in this space either. They just passed their exam maybe a few months ago, and they're a newbie, and all of that leads to a high dropout rate within the industry. Most financial advisors don't make it, and I really think, unfortunately, most clients or customers suffer as a result because they get advice that isn't as good as what it could be.
Yeah. Can
So in
you
my capacity,
What's the alternative? What is the alternative to that sad state?
yeah.
well, I charge money too. So I don't want to be too hard on them. If you want to work with somebody, it does come at a cost, and so I don't do this just simply out of the goodness of my heart. Alternatively, you could work with somebody in what you might think of as more of an accounting or legal capacity, in which you bill them or pay them for their time, and then they'll meet with you for so many hours at a certain bill rate, and then you write them a check directly. Uh, because usually in that sort of situation, there is no other compensation that the advisor receives. That is how we ultimately function. Now, depending on the extent of the service engagement of a client might be interested in, either it's a one-off, we just meet you with where you're at for a few hours and get you on your way, give you some good advice and direction. Or if someone's situation is more complicated and they want to keep working with an advisor, we have an ongoing arrangement in which either they're paying us monthly to keep the relationship going, or they pay us directly off of their investments through a fee that we collect every quarter.
Sure.
There's a lot to be said, I think, for either way. The question here really is, how much does someone need an advisor, and how much could they benefit from an advisor, and when is it best to hire one out, and when is it maybe better for you to continue to do things on your own capacity or through services like yourselves that you guys provide. When have you kind of crossed that threshold when working with somebody is actually going to be really beneficial?
You mentioned the word earlier, fiduciary. And so could you kind of explain, what does it mean when advisors go ahead and become a fiduciary versus when they don't?
Well, fiduciary, it comes from the Latin off of fide, which I'm really familiar with. I have a Latin background, and we have our business called Bone Fide in good faith. So, I'm a pretty big fan of the term. Fiduciary is just really someone who's geared towards doing what's in your best interest. Has what's your interest at heart, and is functioning in a way that is putting those interests first. And so, any service engagement or relationship has always the potential for a conflict of interest that's just really unavoidable. When you ever have the exchange of money, it's always possible that one doesn't quite get what they were expecting or thinking. And so, there's no way to really fully eradicate that. That's just at the heart of financial transactions. But someone who's functioning as a fiduciary is saying, I'm making a commitment. Through just my own actions, demonstrations, maybe the disclosure of what our fees are and how I'm getting paid, and my recommendations, and perhaps being disconnected from other means of compensation. Like when we go to advise and make a recommendation on an insurance or investment product, we don't receive any kickbacks from that. Like
Right.
the totality of my compensation is from our clients, just as a way to minimize any conflicts of interest that we might have, and help us, that if
Right.
we only are recommending someone or something, it's because we truly think that's, the best solution for you.
A follow-up question to that, and maybe this is a little more philosophical, but why would not every advisor be required to take that oath?
Yeah, well, it's
not really an oath, but I think of medical doctors where they have an oath to do no harm and to always provide care to someone who needs it. They're ethically bound. So why would that not apply to an advisor?
Well, it has to do with the history of how this business has come about. There's ultimately two standards of care, if you'd believe it, within financial advising. And depending on which standard you fall on, one is obligated to be a fiduciary, and another, it's maybe good marketing for you to be one, but strictly aren't legally obliged by it. So under our business model, we're what are called registered investment advisors. It goes back to the Securities and Exchange Act of 1940, in which anyone who receives compensation for delivering investment advice must do so as a fiduciary, seeking out what's in the best interest of the client. It's mandated as part of that arrangement. And so, with some of the things that I've already emphasized, there's points of disclosure of conflicts and the like that are all required within that statute. Otherwise, there's this what's called the broker-dealer model or arrangement, in which many of them, because fiduciary is kind of a popular term right now, are also focusing and promoting themselves as fiduciaries. But the reality is their standard of care, which I'm blanking. I wish I had come ready for this. I'm blanking on what that's titled. It has its own technical term. Is that well, I suppose the short is they aren't obliged. It's the short of it.
Mm-hmm.
Which, and I'm not quite sure. It really has to do with the sales capacity of that arrangement. And I don't want to be too hard on this. Like in previous times, this isn't as true, I think, in our present day and age. But in previous times, one of the roles of getting a stock off a company off the ground and helping to raise capital was going out there and shaking at the tree and trying to get people to say, hey, can you sign in or buy into this company? We ultimately need some capital. And it was a sales job. We have capital fundraising in a more mundane topic or task, in which folks are going around trying to encourage to hit their capital campaign, for the school or like you typically see this in a school or a church event, and a lot of that is a sales arrangement. And so in the broker dealer space previously, the advisor was really going out there to do capital fundraising for a company, but their cut in that was getting a commission off of the sale of the fundraising that was taking place. So I feel some of that is the reason why we needed that is in order to get that research, to get that money gathered together, just really required someone to almost literally go door to door, take on this effort and to become persuasive. The market and our exposure access to buying into stocks, mutual funds, ETFs has really been radically changed and transformed in the last 30 years with the advent of the internet, in which, previously, if you wanted to sell some stock, you had to call your broker because you couldn't otherwise do it. I mean, today you can do it online in a few clicks, and it's just a very different model. So I think some of this is just a carryover of the past, but in my opinion, the whole broker-dealer arrangement, as far as I'm concerned, looks like it could probably just go away. But it's still here because that's just what it was. So
you'd mentioned companies, they sell stock in the company, to raise funds for their operations and things like that. So that's certainly a purpose or a reason for investment on their end. What's how would you describe the purpose of investing for people, for the not companies?
Sure. Well, I mean, the reason why anybody invests is we're taking some money that you have. We call it savings, but in a more technical language, we think of it as your capital, which is just reserves that you've been able to acquire. And that's really a remarkable thing. Maybe we should just give some attention. For the longest time, folks lived hand to mouth, and still today in different parts of the world, they live hand to mouth. And so the ability to just have some savings and excess and some comfort, a cushion in your situation is really a remarkable achievement. And it's something that's very widespread and prevalent, certainly in the United States, or it can be, if you're managing your money well, we're living below your means and we've got some money surplusing. So for the longest time, capitalism as a whole, as an economic engine, is geared towards, look, I've got some excess money. What can I do with it? And, other people have ideas. They're like, gosh, I've got a business venture that's going off the ground, or maybe if we get a certain amount of money going, we get some momentum behind this thing, we can resolve a problem that I see in the marketplace that isn't being attested to. And so the point of the investor is to say, hey, I've got some money and you need some money. Let's get together and have an exchange here, and you can go and use that money for your own business pursuits. So really, you invest as a way to further the economy, further businesses, allow innovation, entrepreneurship to take place. And then you're a participant in that, depending on the nature of the investment, whether it's through a bond capacity where you're just lending money and then they're paying it back to you, much like you do with your bank on a mortgage, or as a co-owner, a shareholder in which you become an equal business owner through the lending of your capital.
I like that explanation.
It was so much better and deeper than I thought it was going to be. That's great. It's like, well, yeah, you can invest some money. Hopefully things go well, and then you have more later. But
Well,
you're contributing to creativity and innovation and the pulling up of humanity.
See,
It's
that's the
there we
benefit of
go.
having a philosophy background underneath all of this,
It's
because you can pick out the actual purpose behind it and how it connects us to the deepest things of life and the most meaningful things.
Yeah, it certainly
So,
does. I
thank
mean,
you.
specifically as Catholic investors, you can get behind initiatives that are make the world a better place, hopefully, and at the same time also help you grow wealth. Investing
Mm-hmm.
ultimately is about wealth creation and really taking on a greater role of stewardship to have some more Christian overtones, a greater role of stewardship over the assets and the money that God has given to you. And there is some, we always maybe have an uneasy relationship as Catholics with money and investing, but that's not necessarily true in terms of church teaching. And that uneasiness, I think, is just something that has to be kind of worked through with each of us, because it's not the belief of the church or even the teachings of Jesus that money itself was an evil. It's greed that's the problem.
Mm-hmm.
And there are scriptural passages, especially the five tenants, or not tenants, but talents, in which the
Yes.
servant, the unprofitable servant, actually, who didn't do enough with what was given to them and was scolded. And so I don't think
Yep.
it's the requirement of us is not to avoid money or wealth or stewardship. It's really quite the opposite: is to step in and become those leaders who are in charge of those decisions on what to do to make the world a better place.
I love that. And we often talk about just kind of expanding on this, but this idea of, because we live in the time that we do, and when I say us, I'm meaning mostly, people that are in the United States of America at this juncture in time, and compared to different times in the world's history or even other countries, anybody with an income here is wealthy comparatively. And those of us who can live below our means and live simply and live virtuously by handling our money well and stewarding it for God, I believe we can do so much good by investing. And knowing that we're not just investing to build bigger barns and ultimately to live some big lavish life,
Sure.
but that through investing, we'll not only be able to take care of ourselves and our family later on when we're not earning an income, but all that extra that the economy worked so hard to bring back to us, now we get to play with it and to be generous with it. And that's awesome. And I think that there's a duty for Catholics to think about that and to not just consume their whole life and to show up at the end of it with literally nothing. If we do that, well, then the other side ends up with all the money. And I don't like that arrangement.
That's true, right? I mean, if we don't step up, become the leaders of what to do with money, someone else is going to become the leader, right? If it's not us,
Right.
who else is
And,
going to do it, right?
Right. What's the scripture passage where Jesus talks about being as simple as doves, but shrewd as serpents? Innocent as doves.
Yes.
And I think that can, I don't know if that exact passage was talking about money, but I think there's an element of that. Sometimes Catholics want to say investing feels so worldly, so I'm just not going to deal with it. But I think that, we can keep our souls in a state of grace and have a healthy relationship with the money, but be so shrewd and prudent that we're using everything at our disposal to grow it so that we can support the kingdom. I think there's something really cool there.
For sure. I would say it's even our calling. I mean, as laymen and women, the church certainly has rightfully within it those who are called to religious life and the beauty that has. And I've got some direct experience in participating in that beauty as previously living in religious life for a time when I was a young man. But they're religious. They're removed from the world because they've been called to do that by God. But that's not the calling for all of us. And I think for the
Right.
rest of us who are left in the world, it's a dirty place, and it's Jesus didn't hide himself from that dirt either, right? He got in there and cleaned it up. I mean, he was born in a manger, for crying out loud. And so, like, this whole idea of like kind of a corporate church sanitization of like, here's everything that's good and holy, and then here's everything that's not holy, and let's try to segregate them out, is I think the exact opposite of the gospel message.
Mm-hmm.
So as folks who are listening to this are getting into the dirt, so to say, of investing, what especially approaching it as a Catholic, with the Catholic worldview, what needs to be kept in mind when we're looking to invest?
Well, there's different ways to do investing. So I think part of it is what's your own objective, what's your own interest in being a participant within the investment, because you really have you have two spectrums here. Where you can invest in yourself probably first and foremost. I like to share this and say this with clients just through your career and your education and getting trained in it is what it is that you do, and that in and of itself is an investment. Like you have invested. If like that's what you've done so far is that you've gone to college or gotten a master's degree or some terminal designation, and now you're making money and perhaps maybe a high income. Like that's an investment, and so you are investing. You have invested, but that's an investment that very much hinges on your direct participation in that work for it to pay off. You have to still show up and do your job in order to bring home that paycheck. And on the other side of this, we have investing in which all you're doing is lending your money over to someone else and saying, here, do with it as you will and what you think is best and fit, and maybe give me an update every quarter or once a year to let me know how things are going. And we'll have communication there, but otherwise you're pretty much completely unremoved from that investment, certainly in the day-to-day management of it. And your capacity there is just one who's given capital uh, by and large. And then kind of like in a middle ground, we often see folks who have an interest in real estate investing, which I often see as kind of a halfway point where it's a little bit of an investment because you've bought a property and asset, but it has its passive capacity because it's rented out. And maybe you're involved with the property management of it, but you're not necessarily needing to be checking in on a daily basis. And so part of the question here when it comes to investing is how involved do you want to be with the investment? One of the best means anybody has, truthfully, of growing their wealth and their money and having something to show for all their hard work is to start your own business and to become an entrepreneur and to invest in yourself and to take it to not just simply education, but to the next level of starting and running your own business and becoming your own CEO who owns all 100% shares in that operation, right? So, without question, there's a whole history, in the U.S. certainly, of folks in which their primary means of making money and accumulating wealth and really becoming rich was from that single task. And there's no question that can be the very most profitable way for you to invest and grow your wealth. But it's also the most demanding, right? You're in the trenches.
Not passive.
Yeah, definitely not. Yeah, I think we're both, speaking on the same terms here. I mean, I'm a business owner as well. Trust me, it's not passive. Very little. Very little passive.
Few gray hairs.
Yeah, that's right. I get more and more of them. So, so I think we have to answer that question once. What's your interest? Where are you at even on your own investment? If you're already a high income earner that's established and is just making really good money, I don't think you need to go and necessarily start a business. Your investment in yourself is already paying off. Now it's just a matter of maybe how to handle this in a passive capacity. But and for those who have that, I mean, investing in the broad markets and capitalism as a whole through through just a diversified portfolio of different asset classes, as we like to call it, can be all that you need to do, and it makes perfect sense. Because even though this passive capacity feels like you're not really doing a whole lot, you're not. But the historical returns of just simply buying into the U.S. market, and even more so the global market, it's not quite as robust, but still pretty robust, are around 8 to 9%, 9.5% for the last 200 years in the U.S. market. And that's just someone who's just kind of giving your money over. Getting 9% on your money is pretty good. And in terms of like meeting financial plans, which is really my expertise and what I do a lot of work for, 9% returns on your money is, pretty much enough to meet any plan. In fact, we actually run most of our plans in which you're only getting 6 to 7% return on your money, and that's still enough to meet your goals. And if we actually were to hit 9, which I'm not sure if we will, there's reason to think that maybe 9's a little too rosy moving forward. But even if we do hit that, you don't have to take investing beyond that. So I don't want to take on too much of this show here, but the question is just what kind of investment do you want, and then what kind of risk level do you want? Because there's certainly much more safe or reliable ways to invest, and then there's ones that are ultimately, have risky apportionments of your money. Which way to go with all that really depends on a person's appetite and interest.
So, following up on that, we often will get questions like, okay, so I'm Catholic and I'm ready to invest, but I want to make sure that I'm not going to be contributing one lick of money, to X, Y, or Z out there. How can I make sure that doesn't happen? So that's one question. But then secondly would be, does the church even ask that of us?
Yeah, we get this quite a bit, and I'd like to reference or refer you out to for a more robust answer, because I'm only going to be able to hit on the high points of this. There was a network that I helped co-found called the Catholic Financial Planners Network that has a podcast called Catholic Money Mastermind that addresses some of these investment-related questions, because we see it as advisors too. That the network is other Catholic financial advisors who we have gotten together to hash through some of these issues. And certainly not anti-business, and the church isn't anti-business, and we think actually getting dirty in the world of the business is perfectly fine. It's part of actually being a layperson, layman, laywoman, is to do these very things. But should we, or is it all right for us to turn a blind eye to how we go about making our money, and just simply say, well, maybe if I just make the money and then I give it away in a charitable way, is that sufficient? Can God be pleased with that? And the short of the answer to that is no, no, no. That isn't sufficient, because you have either issues of blood money, as an example, or being the mafia boss's wife, right? Where it's like you enjoy all the diamonds and the furs and the nice cars, but you politely ignore how all that money's being made, and make up for it by saying, well, we give money to the church. Well, I think we all can see how that's not good enough of an answer. The fact you gave the money away, when it came at the loss of other people's lives or livelihoods or threat or coercion or whatever. So it matters. It matters how our businesses are run and what our affairs are involved in. And really critically important for Catholics is we have a concern towards the common good, which is not necessarily the case for everybody who's running a business. They can be very much just concerned with their own good or their customers' goods, right? But this notion of the common good, that ultimately, this business isn't really part of the kingdom of God unless it's lifting up everyone else who's participating in it. I can't be the only one who's benefiting. Everyone else needs to be benefiting equally, or at least not equally, but similarly. Like there has to be that benefit has to be spread about. Like, that's not how all business is conducted today. So can we just simply give our money to whoever is willing to take it and say, okay, great, you gave me some returns? As Catholics, no. But we do, so what does the church have to say on this matter? Unfortunately, business is a muddled mess, because even amongst institutions we do want to get behind and promote, maybe we want to get behind the church. The reality is the church has its flaws and failings too. And, we've had our own scandals, right? And so, perhaps money has been given away and it's been mishandled or misused, abused in some capacity. And so it's not like you can get away completely from the reality that we live and work within a fallen world in which money is not always used to its highest purposes. And so it's an issue of how much screening can we really reasonably employ in this. Is it a fruitless activity? Because at the end of the day, all of us are fallen and sinful in some way. And, it's not as if it's ever going to be perfectly used by anybody. And so I think that's a fair point. By and large, the church's position on the individual investor is that you are welcome or okay. It's not as a matter of conscience to not screen your investments, short of something that's obviously wrong. You couldn't invest in Playboy as an example. Like that's not going to be permissible. But, where we get into maybe it's a muddled mess, by and large, the individual investor is given a pass and said it's a matter of conscience, but you're not obligated to screen. But the church does actually mandate that institutions, basically anyone who has a Catholic personality and is representative of the church, must screen. Mostly, I think, truthfully, from an angle of scandal. Like it would be clearly wrong if a Catholic institution was investing in something that, let's say, was promoting abortion. If that was found out, it just obviously would be completely at odds with church teaching. So there is some level of screening that's mandated on the institutional level. Individual investors free to pursue and go as a matter of conscience. Personally, I do employ some investing and often bring it up, or in some screening, and we often bring it up with our clients. But we leave each person to kind of decide if that's something they want to incorporate as part of their portfolio.
Sure. Okay. That was a really good answer. And I think that the hard part can be, a lot of times when somebody's sitting down to invest, maybe in their 401k, at work, their work only has 8 funds available that they can possibly choose from. And behind the fund, they don't even know what that fund is invested in. So it can be very difficult to actually track down where your dollar went when you're going to contribute there.
Yeah, I would say it's darn near. I mean, short of actually participating in a fund in which it's part of their objectives to screen on moral grounds. And even then, I mean, there's some concessions that have to be made because, as an example, maybe you're in a telecommunications company that most of its business is in cell phones or cable or something. So most of the revenues, it's just whatever. It's what we all use. There's nothing wrong, good or bad about the business. It's just business.
Mm-hmm.
But maybe they also provide some adult entertainment through their cable network and some degree of subscription. And so a percentage of the company's revenues is associated with pornography directly.
Right.
So now it's an issue. Well, do we completely screen out that company because 1 or 2% of its revenue is tied in with this when most of the business is acceptable and really nothing objectionable, and they have a choice for they're pursuing some of it that is. The general take on that in terms of a moral screen is we probably wouldn't abandon that as an investment, but maybe this is an opportunity in which we would deploy engaging the company to say, hey, look, I mean, as a owner, I mean, if you're a shareholder, if you bought into their stocks, you're actually a co-owner of that company. And if you have a big enough ownership position, maybe you could have a little bit of a voice to say, hey, you know what? We're only getting a little bit of money off of this. Like, why are we even bothering? Let's just cut that off as a revenue stream altogether. And so it's called activism to be involved in that way. And, there is success that does happen in that capacity.
Sure.
So it's not an all or nothing. This isn't exclusive. There's some things where I think, yeah,
Right.
it's non-negotiable. If a company, some of the life matters, if companies behind abortions or abortifacients, there really isn't a whole lot of room for us as investors or as Catholics to get behind that and say that's okay.
Mm-hmm.
But apart from some really these hardliner items, there's a lot of this that's pretty gray.
Mm-hmm. So if somebody was listening to this, they're Catholic, they do contribute to the 401k, but they've got a little bit extra that they'd like to invest in a fund that they know has been screened and performs well. Because that's, sometimes it's like, well, it's screened, but it stinks.
Right. Yeah,
It's
that
not
does
actually
happen.
adding any value.
Right.
Do you have like a couple recommendations of funds that kind of are your go-tos that you recommend of like, they perform well and they do screen for ethical things?
Well, my primary solution, which unfortunately isn't publicly or widely available, is to utilize a company called DFA, Dimensional Fund Advisors, who is most of my investment management style is to do what's called a passive buy and hold strategy, which we're principally interested in doing broad market indexes that capture what are called asset classes, and then having those funds in a proportionality to each other that effectively makes a kind of a recipe for how we're hoping to grow and manage your wealth. And so as an advisor, I have access to this company, DFA, to be able to utilize their funds, in which they primarily follow this methodology out, in which, they're very fairly inexpensive in their cost, and they, are principally interested in buying asset classes, not necessarily individual companies. But they only work with advisors. Now, you can't buy them directly in what's called the retail space, unless maybe they're being offered
Right.
in your 401k. Sometimes you'll see them as an option within a 401k. And then
Got it.
if they specifically within their suite of funds, they have a social series of funds in which they actually consulted with the Catholic diocese to basically, if you were to screen, what would your moral screens be? And, as you might imagine, they're actually pretty robust. You know, because it's passively managed, there has to be some leeway in which they're willing to permit or tolerate some things that, we'd probably otherwise not want to see or have. But it's as much as we can do in terms of kind of deciding what amount of revenue a company might be able to have involvement in before we cut them out as a potential investment. And so DFA is certainly a strong solution in that regard, and what we utilize for our clients. For folks who are, who don't have that as an option, there are Ave Maria is certainly a well-known mutual fund. There's an Eventide company as well out of Boston, Massachusetts. That's not strictly Catholic, but they're very robustly Christian. And I've had some interviews and conversations with them. Those would be some of my go-to solutions if my hand was forced. The Knights of Columbus have also some morally screened funds utilized. There's an Aquinas fund as well. There's a Timothy fund that's ultimately Protestant in its definition, but still I think much of it is in keeping with what we'd want to see have happen as Catholics. So there's certainly solutions out there. The one drawback, the caveat I would give to all this is, unfortunately, and I'm not sure why this is, it doesn't make a whole lot of sense to me, but not uncommonly, a fund won't just have moral screens on their investments. They're going to pursue what are called financial screens, in which they incorporate an active management as part of the fund's take. And there's only a higher management fee for that active management. And it becomes not going into too much of a rabbit hole of active versus passive in that whole debate, but in my opinion, it's not clear that you're going to get your money's worth out of the active management arrangement.
Right.
You might get your money's worth out of the moral screen, but the financial screen may not be all that worthwhile. It's just a lot of those companies, for whatever reason, aren't offering a passive solution. I really wish they would. I've brought it up to them. I've said, why don't you guys just at least offer a passive solution? I would totally give you business if you did. And they just choose to offer active management. They think they can be better from the market. Does that hopefully that answer your question? I know that was perhaps long-winded, but doing what it can.
Does. No, it does.
Absolutely. No, this has been an incredible conversation. I think it's been richer and more, like a good soup, right? It's very rich, it's very satisfying, and it leaves me wanting more. So for folks who are in that same seat at the dinner table as I am, after this episode, where can they go to get a little bit more of this kind of perspective on money and investing, and maybe some of the other work that you're a part of?
Yeah, thanks, Jonathan. So I'm happily part of the Catholic Financial Planners Network. Again, that's something I helped co-found a few years back. So we've got about 10 advisors who are part of that, and we have our own podcast as well, in which we're addressing common financial planning topics that we come into. So certainly can learn more in that regard and meet other similarly minded advisors. My business, Bone Fide Finance, which is finance in good faith. I have 6 semesters of Latin under my belt, so I feel like I have to use it. Otherwise, why did I study all this? So bonafidefinance.com, otherwise pronounced Bonafide Finance. You can learn more about the financial planning business I have there. But then I also have, here we go, a tax business called Magni Publicani, more Latin, which means great tax preparers in Latin, or at least that's what I like to call it. Yeah. So I have a tax business that is focused very exclusively on student loan borrowers who need to file their taxes separately as a way to help manage that student loan debt. And that's a specialty that not many tax professionals are able to speak to, and it's something we do pretty much on a daily basis. So you could also learn more from student loan tax experts. And then lastly, if you're interested in just entrepreneurship on a whole, I've recently launched a podcast called the FI Entrepreneur, Financial Planning for the Risk Taker, in which one of our angles is actually to push on that first form of investment that I made mention of, helping young people who are interested in entrepreneurship, having that as a pathway for retirement and really as part of their financial plan and seeing success in entrepreneurship. That's what that podcast is all about.
Very good. Very well done. Yeah. Well, make sure to link up to every one of those in the show notes. So if people are interested, just go below and you can click on that and get in touch with Ben and ask any questions if you'd like to. Reach out to him. Thank you again for being a guest on the Wallet Win podcast. There was so many more conversations we could have had.
Oh, I want to get into
we're just
truck driving to pay off debt. We're going to have you back.
We're going to have to reschedule another episode down the road. So look for him to return to the Wallet Win podcast. God willing, he wants to someday.
Of course. My pleasure. I love it.
Yeah, thank you again for joining us. Bye for now.